Zillow's share price has taken a huge beating after the news came out that they are no longer buying houses and are expected to lay off approximately 2,000 people, or 25% of their workforce. Now, with such a rapid share price decline, do we have a potential opportunity here with the baby being thrown out with the bathwater? We discussed the opportunity in part 1 of the Zillow 2-part series, and in this video, we're going to discuss the details of the Zillow valuation model. And before we get into it, guys, please don't forget to smash that like button. You're watching More Money. Let's get it. So first things first, you can grab the model from the description below for free. Now you can see that I made it very simple. I just built out a pro forma 2021 and beyond model, which encompasses the remaining 2 segments. And of course, this eliminated any one-time restructuring charge. I'm just trying to keep it high level and simple here. Obviously the home segment is gone, so it's grayed out, and I'm growing out the remaining segments at about 20% for the remaining 5 years. I gave them a bit of a boost in year 1, as we are seeing a bit of a boost in those segments in the near term. When it comes to the segment profits, you can see here that here's where I'm being the most liberal, with the IMT segment profit increasing to 30% and the mortgages business segment increasing to 5%. They can get to those levels. I do think it's a possibility, but I'm not an expert in the business. There very well can be a situation where the segment profitabilities top out at less than what I'm modeling. But the point here was to give them a little bit of a leeway and then see what that valuation reflects relative to the current valuation. Now, the way that they provide the segment information, they take into account the SG&A and R&D costs, so I'm not going to double count them. In discounting the earnings each year, I use a discount rate of 11%. Feel free to change that as you wish. I'm also using a terminal multiple of 20 times earnings. You may want to disagree with that multiple and make it lower or higher. Let me know in the comments below what makes most sense to you. Also, let me know if you're incorporating R&D costs going forward, or you want to strip out that R&D cost to make the valuation higher. There are a lot of areas here where I could be wrong, so of course I would not want to buy this without a large margin of safety, so I would not be interested in Zillow until the market cap dipped below $10 billion. That being said, I still do believe that Zillow has a wonderful moat by creating a search product that is miles ahead of the competition. If you missed the first video where I covered a more qualitative analysis of the whole situation, fear not, you can get to that video by clicking right here.